So in the previous video we have studied about X interest. In this video we'll be studying cumulative interest price. Okay. So before starting that, as I told you, many of the students don't know purchase entry as well as sales entry. So how to answer that quickly, because this is the most simple thing and you should know this. This is a shame for the CA student who is doing and he does not know this. So I'll explain you in a ledger format. So firstly we'll understand cash bank account. So we'll assume it is a cash account as well as a bank account. Okay. Debit, credit. This you have to write always because this is very important. Don't miss this part. So what is cash account? Cash account is a real account. Okay. It is I hope this is visible. Real account. So what does the golden rule of real account says? Debit what comes in, credit what goes out. Okay, so this is the basic golden rule, real account golden rule. This you have studied in the 11th standard. Many of the students don't know golden rule. What does golden rule means? They have just memorized all the entries. God save them. So how to apply the golden rule? Why it is known as golden rule? Because it is very easily applicable. So firstly we'll see, if you sell something, what comes in? Cash comes in. In cash, the debit side will be to sales. Why to sales? Because cash is coming in the cash ledger. Cash is coming in, so it is debit side. Debit what comes in? What comes in? Cash comes in. So cash comes in, it is on the debit side. While doing purchases, cash goes out. So what is the journal entry? By purchases. Purchases account, sales account. So what is the entry for purchases? Purchases to cash. What is the entry for sales? Sales to cash. Hope this is clear. If you don't understand the difference, please write this because it will help you in the future, because we have to deal with cash account, we will have to deal with debtors account, we will have to deal with creditors account, purchase account, sales account, and many accounts in the future while solving other chapters. So first please do this, write this part. It is not appropriate to study this in the IPCC level, but still it is never too late. Before it gets too late, please write it somewhere where you can see it, read it, understand it. Okay. Hope you have done. Again I'll explain it. Any sort of income coming in comes in the debit side. Any sort of expenses goes out, that means you are paying, your cash is going out, it comes on the credit side. Just apply the golden rule, but don't apply the golden rule for credit transaction. Okay, we are just simply understanding it for cash transaction. For credit transaction there will be two different ledgers, that is debtor account and creditor account. Okay, I hope you have copied this part. Please, if you have not, please pause the video and copy this much. Hope you all have copied. Now this was the X interest part. If you want, you can write over here X interest price example on the top where you have solved this sum. Now we will be seeing cum interest price sum. Cum interest price sum example. Okay, we'll take an example. On 1st September we purchased, again the same what we have studied earlier. We'll be solving how to solve it, how to calculate the accrued interest, and how to calculate face value and cost. Face value and cost is very simple, and afterwards we'll be seeing journal entry. Okay, as per cum interest price, on 1st September we purchased 4,000 12% debentures of rupees 100 each at rupees 101 come interest price. Okay, so this is the question. So as per our solution, firstly, as our column says, as our column, we have to calculate first face value, then we'll calculate cost, and then we'll calculate income. Okay, so firstly we'll calculate face value. So what is the face value? The face value is very simple. 4,000 12% debentures into rupees 100 each comes to rupees 4 lakh. So face value we have received 4 lakhs, quite simple. Now we'll calculate the cost, but here calculating cost is not that simple. Here firstly we'll not calculate cost, but the formula to calculate cost over here is price come interest price less accrued interest. Okay, so we have written the formula over here. Now we'll move ahead and calculate income, that is accrued interest. So we'll write firstly the face value amount 4 lakhs rupees. What is the rate of interest? The rate of interest is 12% divided by 100. Not 12%, it is 12 divided by 100 into, we'll calculate months. Now let's see, here also same, assume due date of interest. The date is means the date of interest is same, 30th June and 31st December. So now let's see, here on 30th June you have received interest. Okay, the seller who has sold, he has already received interest on this securities for half yearly on 30th June, and he has sold the securities on 1st September. So let us take date of interest is equal to 30th June, which is equal to 1st July, and date of purchase is 1st September. So let's count July, August. So 2 months. There is a gap of 2 months. That means the seller who has sold, he has holded the securities for 2 months after receiving the interest. That means in the later 6 months part, whatever the interest is, it will be divided in the ratio of 2 months, that will become accrued interest, and the later 4 months will become our revenue income. Okay, it will become our revenue income. So interest we haven't calculated yet. Now we'll calculate it. We'll calculate interest. How? 2 months divided by 12. Let's calculate. You guys see, 4 lakh into 12% divided by 12 into 2 comes to rupees 8,000. So accrued interest is 8,000. Now let us calculate this cost. How will calculate cost? Come interest price they have given. So we have purchased 4,000 securities at a come interest price of 101 less accrued interest, that is 8,000 rupees, is equal to 4,000 into 101 is equal to 4,004 minus 8,000, which is equal to 3,96,000. So that means that he has paid the capital expenditure of 3,96,000 for purchasing, but he has paid 8,000 as a revenue expenditure, because this is the revenue expenditure that he has to pay to the seller who is selling us the security, and he has holded the security for 2 months. That means 2 months interest is outstanding for that seller, and 4 months interest we have to receive. Okay, so how will account that in our books? That we'll see it later. Firstly, this part, I hope this part is quite clear now. Okay, how we have to calculate it? We have to calculate it from the date of interest. Date of interest, the date of interest are 30th June and 31st December, and we have purchased the security on 1st September. That means after the date of interest from 30th June, so we have to calculate the number of months the seller has holded it. he has holded the security for 2 months. That means 2 months interest is outstanding for that seller, and we have to pay him that. Otherwise, he will not be going to pay us. Otherwise, he will not be giving us his securities. So, income interest, the price of interest and the price at which he is selling, that means the capital expenditure and the revenue expenditure are clubbed together, and in X interest price only the capital expenditure price is given, and we have to calculate simply the accrued interest. That means the revenue expenditure we have to calculate, and we have to write it in the income column. Okay, I hope this part was clear. We'll again solve when we'll again solving the sum. That time I'll explain it once the last time, and after that I won't be explaining. We'll directly doing the income part. Directly we'll write the amounts, and we'll calculate the percentage as per the months. Okay, hope this is clear. Please pause the video and copy this part. I hope you have copied till here. Please copy the remaining part. I think I don't need to write the journal entries now. Okay, I'll write the journal entry. The journal entry is very simple. You all will only say 12% you have purchased. The purchase will be 12% debenture account debit 3,96,000, interest account debit how much, 8,000, to cash. Cash is going, right? Cash slash bank account 4,04,000. Okay, if you want please copy it. I advise not to copy, just apply the logic and write it.